to Livewire's top-rated fund series. I'm your host, Ali Selby, and today I'm lucky enough to sit down with Resolution Capital Executive Director and co-founder, Andrew Parsons. Thank you so much for joining me today, Andrew.
Thanks, Ali.
Before we get kicked into the interview, I just want to know what motivates you as an individual.
Yeah, it's a good question. I mean, how deep do you want to go? But look, I think basically it's a case of, I've come from fairly, basic, humble background, and there's an element of trying to prove myself in the big time. So that's, I think, have to admit, part of it. But I've also seen a lot of people, do poorly over the years out of investment, and I'm just trying to basically offer something that we try to stand behind as being a good, solid strategy for investors in the long term.
It's quite rare to find people without that kind of ego in this industry as well.
There's ego in there. There's always ego in there.
Yeah. Tell me a little bit about your background and how you actually shaped your investment philosophy.
Sure. So I found my way into the market effectively when I took a year off university, and I ended up getting a job, very basic job at the stock exchange. It was then the Sydney Stock Exchange. And then fortuitously happened to find the right people who offered me a job in stockbroking. And from there, it was a case of doing something that nobody else wanted to do, which was real estate. When you're in broking, everybody wanted to do the really exciting stuff, which in those days were things like wine companies, and technology was still sort of a growing area. And I sort of found my way into that and really enjoyed it and thought, well, this is an area where I can see real changes coming, because it was just after the property crash of the early 1990s, and I could see that there was going to be a lot of change. So I was in the right place at the wrong time, if you want to put it that way. And then I went to Lend-Lease Investment Management, and there, having learnt the stock market dynamics, I was fortunate at Lend-Lease Investment Management to understand investment dynamics, and we were exposed to a whole range of different external investment managers, some outstanding investment managers, that I could then understand investment better. And so, I was very fortunate that just being able to find my way through some outstanding organisations to better understand and give me a more rounded perspective of the world.
Were there any mentors that were really pivotal during that journey?
Look, everybody has influences. I've been very fortunate. I had a number of influences along the way. The guy that first employed me in stockbroking, Lachlan Drummond, he was a terrific guy in terms of real intellectual. So that was terrific. And he gave me the job because during the interview process, he said, "What do you like doing?" And he said, everybody had been talking about all their trading and inside trading in those days. And I said, "I like having a beer." And he said, "Well, you answered it differently, and that was good enough." So
welcome to the team.
Exactly. And but then after that, basically a number of corporates. I'd have to say Peter Daly at Stockland, Dennis Broyd at Mirvac, who hung up on me one day when I was in stockbroking and said, "You better learn about what you're doing and then call me back." Now that was, to me, exactly the right advice I needed. And it did make me think about what I was doing. And
Tough love.
Yeah, it was fantastic. So there's been a whole range of different people who have been there along the way. And you don't do anything get anywhere by yourself. The people I've worked with, been very fortunate.
Andrew, what is one topic or investment theme that you and the team are spending the most time debating right now?
Well, there's been so much turmoil associated with the pandemic. There's so many different things about how we're going to emerge. Pent-up demand, the changing office dynamic is obviously very topical in real estate. And so at the moment, it's almost looking at short-term dynamics versus long-term secular trends and trying to weigh those issues up. So that's, I think, a big topic of discussion among the team at the moment.
Why do you think that's so important?
Clearly, in many respects, the pandemic has just accelerated the change, and that's been a lot of people have spoken about that issue. But there's also been other sort of interesting nuances trying to understand. Retail property, funnily enough, has in some ways been rejuvenated by the pandemic, because it's forced real estate owners and retailers and landlords to think about how to best serve customers. So funnily enough, retail in some respects has benefited because they've become fulfillment centres, not just the traditional retail concept.
Has it changed the way that you invest?
I'd like to think it hasn't, because these issues, you come up against them every so many years. As long as we stick with our principles, and our principles are, strong balance sheets, outstanding real estate and aligned management, that should stay the course, quite frankly.
Where do you think we are in the market cycle right now?
Yeah, it's a great question. I mean, the market is drunk with liquidity at the moment. It's had an enormous amount of government intervention, central bank intervention. So I don't know that I can honestly answer that. All I can say is that it's just an unusual set of circumstances, and trying to come to grips with, as I say, the enduring impacts of all those different inputs, QE, low interest rates, and as I say, direct government intervention, that's a tricky one.
Yeah. What's the one investment topic or theme that you think investors have to get right to be successful over the coming decade?
I guess, everybody's fixated on climate change and zero carbon. I think that's an important area to understand what's greenwashing and what's reality. So that to us, we're hearing more and more from investors as being a real issue. Other things, again, the future of office, what that means. So, for us, it's about, again, being disciplined in your approach, being curious, and trying to not pretend that you've got all the answers. That's I think, the hard part. But for the next decade, as I say, really, climate change is a critical issue. I think if we could try and perhaps refocus it away from the term climate change to health, I think that's a better way of looking at it. And so if we can come to grips with those consequences, that to me will lead to much better outcomes all round.
What are some of the, types of investments investors should look for in terms of that climate or health theme?
Sure. Well, look, Timberlands are an interesting one. There's a couple of timber REITs out there that we really think are pretty interesting, because not only are they sequestering carbon or carbon sinks, they actually are effectively making carbon building materials, because that timber captures the carbon and then the tree is used to help in the building process. So I think that's a really exciting one for the next 10 years and probably still underappreciated. There's been an enormous increase in lumber prices, and there's a distinction between lumber price and the timber price, believe it or not. The lumber is the cut timber. The lumber price has escalated dramatically, but the timber price, the log price, has actually stayed quite low. And the reason for that is around the disruption caused by COVID and the lockdowns, etc. So I think the timber log price, that's going to be an exciting area for the next decade, quite frankly.
Awesome. And just want to finish off on one practical tip for investors to help them be more successful.
Look, there's more than one way to skin a cat. And what I mean by that is that I don't think it's right for anybody to be too prescriptive. I think you've got to find a style and an objective of what you're trying to achieve from your investing. If you want to gamble and try and pick the next, Google/Amazon/Apple, etc., so you should. But for every one of those, I can tell you there's 50 failures. It's very good that the market picks the winners and forgets the 50, 100,000 that fail. So if that's what you want to do, be realistic. But also, as I say, there's other ways of investing for the long term, which provides a more secure path to wealth. And that's the way we look at it.
Well, Andrew, it's been an absolute pleasure to talk to you today. Thank you so much.
Thanks, Ali.